Hi, everybody. So this is the e-commerce session. I've got some great panelists, and we're looking forward to just kind of covering some basics, and we've got definitely have time and the expertise to answer a bunch of questions. So I'll start with the intro. I'm Scott Scharf, your CTO and e-commerce practice lead, for those who nobody doesn't know me. I've been working with e-commerce businesses for 11 years now, and I'm a 40-year IT professional. So I've been doing technology and a wide range of things for quite a while, and looking forward to giving you guys an overview. Jamie.
And my name is Jamie Shulman. I work at A2X, accounting software business for e-commerce merchants, sellers, and their accountants and bookkeepers. Before that, I started and ran a company called HubDoc, which was also in the data automation space. I'd add that in a previous life, about 20 years ago, I was an attorney advising startups. And I'll end by saying I'm Canadian and married with a couple of teenagers.
Hey, hi everybody. My name is Jermaine Brown, and I am a former e-commerce entrepreneur. So I ran an automotive e-commerce company for over a decade. And after I transitioned out of that, I went to the dark side of venture capital investing. So now I invest in early stage startups. So.
My name is Philip Gossling. I'm a co-founder of a company called DoMyOwn.com. It's an e-commerce retailer that sells professional pest control and lawn care. And we started back in 2004. My brother and I started the company, and we recently had an exit in 2020. And I'm working for the current company, Central Garden and Pet, and happy to be here.
Cool. Thank you. All right. So I'm just going to give a quick overview. E-commerce is still very, very interesting. It definitely has long-term potential, okay? E-commerce is going to do nothing but evolve. It'll evolve and change, but I don't see it going away. It's going to be part of our lives for quite some time. But there are quite a few things going on. There's a lot of consolidation in the app space, especially on cloud inventory, but we're seeing more and more of that. You know, everyone was spread out trying to solve all these different problems, and now they're pulling everything back together. Shopify laid off like 1,000 people. I think it was 1,000. And so they overbuilt, thinking that they were going to do, a bunch of things, and things would keep going like this versus everything else. And Amazon continues to be Amazon. For the people that decide to do it, there's some value there, and if you choose not to, that makes sense as well. Kind of talking about the good, bad, and ugly. Like I said, there's really great long-term prospects for our clients. New people to come in, it's harder than it was in 2012 when we had our first client. You could just find any sort of product, throw it up on Amazon, and it would show up and you could sell it. And it's much harder now. You have to do ad spend and everything else. But there's still a huge opportunity for the sellers and for ourselves to support them. The supply chains are still continuing to impact our clients. When you can't get products to sell, look, we've got a beautiful website and a great Insta following and all this other stuff. And yeah, we're back ordered. Well, how long? I don't know, 3 months, 9 months, not knowing what's going to go on has been there. Another big bad issue, and we'll cover that with a couple of us, which is, runaway or ineffective ad spend. We've seen clients go into the red. We have a client that's leaving us because they're going under because they just burned up cash into marketing spend and did not get the return that they needed. The ugly part is with the economy slowing down, a lot of the e-commerce sellers are looking forward and they're all holding back. They've got a bunch that expect flat sales. Just about all the people I've talked to for months now expect flat sales. And they're cutting back on growth. There are a few that are doubling down, going, ooh, when there's a downturn, I'm going to double down and I'm going to grow aggressively during this time frame. But that's probably maybe 20%. I'd say 50% are like, whoa, wait, I want to make sure I'm showing up cash and being ready. So those are the kind of things, and they are holding back on outsourcing. So, there's some that if they haven't outsourced yet, they're like, nah, we'll put that off for a certain amount of time. So it's just kind of interesting how clients are just adapting to the space, but they're really dynamic entrepreneurs. I mean, one of my favorite parts is our clients. I really like our clients. They're interesting entrepreneurs. They're trying to do great stuff. They're, good parents. We're all biohacking our lives and doing all the things. So it's a lot of fun. I'm going to hand things over to Jamie. Jamie, what is the value that accountants bring to sellers, and where does Acuity fit in the space?
I would say, well, referencing your point around the macro environment, I think we all know that. Stepping back, it was pretty high flying when the pandemic hit. People say things like 10 years of e-commerce, got accelerated forward. And so in those days when you could just spend money on Facebook and generate a whole bunch of sales, it was seemingly pretty easy, and a pretty frothy environment for e-commerce sellers and merchants. And in those circumstances, I think from the accounting side, it was more like, I think people would say it was more compliance and, gosh, I need to file my tax return. I probably need some financials. It was a little more a necessity. And perhaps even an afterthought when you're busy kind of just making money and growing sales. And in a world where they're facing now and have been some headwinds, whether it's, and we'll get into the details of the headwinds, but even just the overall environment that you've articulated, it turns out that having your books done and understanding how you're doing becomes less of an afterthought and a compliance exercise, and more of like, it turns out I can get a better sense of how I'm doing at a granular level, like whether it's cash flow or whether it's profitability, et cetera. And so I think at a high level, we're actually through this tough environment, we're seeing demand continue quite high, but almost for a different reason, where people are really looking to get deeper into their financials as opposed to having to do it, like more like going to the dentist. Now it's more like they're seeing the insights they can achieve. How does Acuity sit? So we work with at A2X thousands of accountants and bookkeepers, and so we have a pretty good lens on the kind of the market more broadly. Mostly, I think 70-ish% of our business is in North America, which most of that's in the US. I'm from Canada, so there's a small business in Canada. I would say, and I'm not just saying this, and we haven't really discussed this, but Acuity is extremely impressive, and is right up there in terms of building out a successful firm. And by that I mean, this tough environment isn't just for e-commerce sellers. I think, more broadly, I'm guessing everyone in here would probably agree. It's been a tough time for a lot of people, and those struggles can be everything from, from mental health and from a wellness standpoint to adjusting to working from home versus in office or combined, and what's their, home situation like for working. And if you have a family, there's all sorts of stuff going on. And so that isn't just e-commerce sellers, that's also for accounting firms and their people as well. And so it's something I've said over many years is that people are everything. It's kind of an obvious insight, and I think, it was alluded to this morning, people are everything. And so when it comes to accounting firms, and what we've seen is that there's been real struggles with firms and people, whether it's being able to hire amazing people, retain them, compensate them at levels that maybe they feel they now are entitled to, and all those types of challenges. And it seems to me that I've known Kenji and Matthew and you and Patty for many years, and just the combination of what you guys bring together. I mean, it's beyond just the four of you, but knowing you for so long, is this. It just seems to be a group of human beings that are coming together and trying to build a firm where it's really about people are everything and people first. I mean, this whole event is an example. And so when you do that, my view is, I'm talking too long, sorry, but my view is that, our North Star is creating a work experience at A2X, and we did this at HubDoc before, where everyone comes to work, and ultimately 25 years from now they'll say that was the best place I've ever worked. And so I think it seems like Acuity / Catching Clouds is doing the same thing. And so if you created a work environment where people are loving coming to work and feel great about their colleagues and the work that they're doing, and it's purposeful for them, it turns out delivering great client experience and customer experience follows. And so I don't know. I guess it's a compliment. You weren't fishing for that, but you guys are up there. If not, you're right up there at the top in terms of succeeding as a modern accounting firm.
Thank you. Jermaine, you want to talk to us a little bit about ad spend and anything else that you think What are the key things you're seeing?
So I think how you acquire customers and how much it costs to acquire that customer is really critical. And I think previously a lot of e-commerce sellers could rely on Google, Facebook, or just other platforms to acquire their customers. What's happening now is those platforms themselves are going through a lot of changes with privacy and other things. And so they are changing the ad rates, and that is making the cost to acquire customers unpredictable and go up, which means that some of the e-commerce sellers are becoming unprofitable, and it's nothing that they can do about it, right? It has nothing to do with their service or their products or anything like that. I think that what you're going to start to see now is people, they understood it before, but it's going to become critical and imperative to build a brand, to offer content, and to attract customers in more of a long tail, organic way, instead of just paying for clicks and acquiring customers that way. I know Philip can talk to this a little bit more, but I don't think that ad spend is going to go down anytime soon. I think that as these platforms are under attack, they're going to continue to try to maintain and grow their revenue, so ad rates are going to go up. And that's going to be detrimental to e-commerce sellers, right? If you budgeted for X percent and it's now, 25% or 50% or double, like that throws your whole business model out of whack sometimes. And so I think it's really important for e-commerce sellers to understand that, to watch it and have a pulse on it, and to have an alternative strategy if they don't have one now. Otherwise, they could go under. So,
No, that's great. And one of the things I know the team knows, I always bring up, keep an eye on our clients' ad spend, because a lot of times they have runaway ad spend, and they have deals that they set up the programs wrong or set them up in parallel, and all of a sudden you're just burning through money, and they don't catch it fast enough. So that's one of those things that's key. Well, sounds good. Philip, do you want to talk about shipping or whatever else? What else are you seeing in the industry?
Yeah, and I comment real quick on the ad spend. I mean, we're seeing it too. I think retailers across the board are seeing an increase, especially in the last few years. Not only do you have platforms, marketplaces kind of raising the rates, but just the competition is just increasing. It's easier to get online. Also, you have major retailers like Walmart, Amazon, Target, the big retailers who carry a large breadth of products are trying to protect their top lines, trying to comp against a super strong, crazy 2020, 2021, and we're seeing these ad rates go up. So if you have retailers not tracking that, or it was profitable, it's very likely that it's quickly becoming not profitable. And it's really important to have somebody on staff at those companies that is analytical and able to keep an eye on this and push back against their ad companies they're working with, to make sure they are continuing to optimize that marketplace, that ad spend, and keep tabs on it, because it continues to grow. And Google, unfortunately, I mean, pay-per-click used to be the easiest way to get profitable new customers. So. And I think that also what these guys said was just building a brand is where we see it going to, just making sure you're spending that time to help build a brand and find other marketing channels away from pay-per-click. You'd still need to stay in there, but continue to try to build a brand and build an experience around your site and what you're selling, because that just makes it easier in the long run. On the shipping side, shipping rates also continue to go up. And one of the things that was brought up in our kind of preliminary call for this is that's another thing that bears some spending time on and looking into, especially if you have a retailer that's been with a carrier for a long time, maybe has only tried to negotiate with them themselves in-house. There is a great benefit to looking at a third party to come in and negotiate for you. And maybe it's time too, it's been several years to even try to shop that against other carriers. So there should be a way to offset a lot of those increasing costs each year by doing those strategies. But if they haven't done it for a while, there's definitely, I would say, some icing on the cake that they can get, that they can win back. So.
No, that's great. I mean, looking at Marketplace Pulse, if you look in early on in 2019, it was $2,000 for a 40-foot container from China to get it to the U.S. It's been in the 15 and up to 20K for the last year, Okay, I mean that is just a huge incremental cost that increases, for the clients. And so we there are a lot of things that we really want to look out for. Philip, you brought up some other topics, not just data analytics, but a few other things that you think are kind of critical for these businesses to be successful and work long term.
Yeah, we, besides brand building, I think another thing we discussed was data, which I know is really important to a lot of you. I know the ATX is big in getting data out of Amazon. And that's something that is worthwhile to be able to be gathering that data and be able to use it to help make these decisions. So for example, in just a few that we've mentioned here, like ad spend and what are my, my fees, my shipping costs, can I save on those? All these are soon fast becoming more of a data question. And so the more data that retailers can begin to collect, to understand, and kind of become more of a data-centric company, the more it's going to help them make better decisions in the future moving forward. So definitely something that's worthwhile getting the dashboards together, start stepping into that if they're not yet, and walk that path. There is and I'll hand it back.
I had a quick thought, Philip, which is one thing that we've seen at A2X is the demand from the direct sellers, the merchant sellers to A2X has increased since last year. And it's evolved a little bit. And it actually is about that question, like the inquiries are a little more about specifically analytics, and can I get an accountant or bookkeeper, an expert who can help me, as opposed to, as I was saying, kind of, previously it'd been more like, I just need the data to get my tax return done. It was more compliance focused. So we're seeing that, and we've launched an enhanced directory where we have firms like Acuity are in there, and the merchants come in, and we're seeing many more of them asking for help from an expert. So your services are going to be needed more and more as things get more challenging.
That's great. I got one thing to add to that too. When I had my e-commerce company, on the data thing, we noticed that we ran, I don't even remember, but data was siloed in a variety of different systems, right? And so it's really hard to understand exactly what's going on when you've got customer relationships here, inventory data there, financial data here, some other stuff here, some other stuff there. So as e-commerce companies become larger and more complex and more sophisticated, it becomes really important to get all that data into one place so you can start to marry it together and to understand what's happening. And so you can make decisions, to Philip's point, based on data, right? Because it gets to a point where these owners, like, you can't have your finger on the pulse of what's going on. Like, it's just too complex. Like, you need to use the data to understand what's happening and to catch things early, right? Like, you don't want to be a month later getting your books done and you're like, oh my gosh, like, we lost a ton of money, right? You probably want to be 7 days and looking at that on a weekly basis or however frequently you can do it to kind of say, oh wow, like, we're not trending in the right direction this month. Let's make some changes so that we can still hit our objective. So that, to Philip's point, the data becomes really important, and having those dashboards as an owner or a manager becomes critical. And, I think that more people are going that direction now, but, I knew many e-commerce sellers that they'd wait to the 10th of the following month to be like, yeah, I don't know how we did, right? Which was crazy to me. So
What you had some comments about how are the privacy changes going to impact ad spend?
Yeah, so I think what you're seeing now is Apple decided to make some changes that impacted, I think, Facebook, maybe even Google. And I think that you're seeing a lot of those companies hurting, right? I think Facebook for the first time reported that it didn't grow, and it's planning on spending, don't quote me on the number, but $10 billion on new initiatives, right? And so they're going to have to make that revenue up as in some way, some form, some fashion, and it's going to come in likely price increases to customers, i.e. higher ad rates, right? So as this privacy game kind of plays out, I think that the paid advertising that we've seen historically is going to look vastly different going forward. And I think that e-commerce sellers need to have another strategy and be abreast of like what's going on with these larger platforms to understand that I can't just rely on those guys to acquire my customers. I need to have another strategy. I need to be adding value to customers in a different way through content, education, or just some other way. But paying for clicks is not going to be the only viable way to acquire customers. Right. So,
no, that's great. The one of the things that we're there, at least from Acuity and our e-commerce practice, is to really help our clients not only just do management accounting so they know where things stand on a daily, weekly, monthly basis, but it's to help them have a great exit. So I've been talking to our team about a great book called The Exitpreneur's Playbook by Joe Valley, one of the brokers that we work with. And the great thing is he does a great job saying, here are the 3 things you need to do to get the most return and the largest multiple on your business. And the first is accrual-based accounting, okay? And so you've got a whole bunch of sellers going, oh yeah, I should probably do that. And now they do, because they're like, oh, I'm gonna sell in a year or 2 or whatever time frame. The second key thing that he recommends is that you have to have a unique product. You can't just be a reseller of other people's stuff, because you're just doing it faster and somebody else can take over. You need to have your own unique products, whether it's private label or your own design. And then the last is you have to have a solid both marketing campaign, but really a social following. You have to have that organic ability to really pull people in. Jamie, what are you seeing sellers, are they starting to catch on? I mean, more people signing up for A2X and going, oh yeah, I do need good data, I do need good accounting.
Yeah, it's interesting. I was just thinking as you were saying that, am I right to say, I think everyone sitting here by coincidence has had a exit?
I didn't have an exit.
Okay, well, you're exiting. You're always at. You're which is, I would say that with these merchants and these sellers, absolutely, we're seeing more like direct discussion around that. Like that's why they're coming to us saying, I understand that I should be getting my books in order because I should be thinking about an exit. I don't know whether they're reading Joe Valley's book or whether they're being more thoughtful about it. I share that view. I know people have asked me about selling HubDoc, and I often say to them, we didn't sell HubDoc. HubDoc was purchased, and meaning that like you need a buyer who wants to buy you. You can't just go out and think, I'm just going to sell my business. And so the idea of being prepared for when a purchaser emerges makes a ton of sense. And so we are seeing a lot of that merchants who are coming and specifically mentioning exits. Interestingly, I think I told someone recently, I think I might do this story, which is we now find ourselves working a lot with aggregators, companies that are, I think that's the term, who are rolling up, a number of brands or sellers. And they're in the news a lot where they raise, a lot of capital and they buy up these companies. And so we see businesses signing up for A2X and just adding dozens and dozens of subscriptions. And we're like, who is this? It doesn't seem like an accounting firm that's magically, got hundreds of clients. And it turns out it's these aggregators. And so we've spoken to a number of them. And one of the themes that we've heard is that when they go to do due diligence and they're doing the research on these companies before they make an offer to buy them, they learn that it's not a proper accrual-based accounting. And often it's as simple as they're just booking deposits from, say, Shopify or Amazon into from their bank account straight into their GL as sales. And it turns out that it was net sales, and their sales are actually quite a bit higher, but they weren't realizing that sales tax and refunds and returns and fees, a whole bunch of things that come off of it. And so these aggregators, a number of them said to us that we have to inform the entrepreneur, you actually are not a $2 million business, you're a $3 million business. And so, because you're not accounting for it correctly, it's something as simple as that. And to which the entrepreneur often then says, well, then I want you to buy me for more money because I'm a bigger business. So we are seeing that, even in a simple example like that people are recognizing this, and it might be in some ways from Joe's book.
No, yeah, that's great. Well, Marketplace Pulse today, their newsletter today, showed the amount of VC funds in aggregators, specifically Amazon aggregators, and it went just like this, and then it plummeted down. Yeah. So we are seeing that the money's not only not being invested, it's being pulled back. I know of one group that the VC has come in and taken over, and they're running the business because they're not getting the returns they want. So there's just a lot going on. The other thing, talking with Joe Valley and a few other people, last year was just kind of the heyday, and people were getting between 3x and 5x multipliers on their SDE, seller discretionary earnings, and or better in some cases. And now it's 2 to 4, maybe. Like that, multiples come down across the board, whether it's an aggregator or somebody else. So there's just a lot of interesting stuff going on. Jermaine, what else have you run into in e-commerce that you find very interesting?
Yeah, I had a question because they're on the front lines, and I was going to ask them like, what's top of mind for you guys that we have not addressed? Because you probably, at least for me, you see more than I see on a daily basis. So, any burning questions or like, hey, I've seen this.
But as a person, when I'm going to shop and if I have to pay someone $10 for shipping, and if Amazon is going to deliver it to me in 2 days without any shipping cost, I'll go to Amazon. So what kind of business should it normally call like a third party to help get a better deal on shipping deals?
I'll say something that you didn't ask, but you probably should know. So there's also companies that will, and I think Philip, you brought this up yesterday, that will audit e-commerce companies' shipping bills and get refunds for them, right? So, hey, the FedEx or UPS didn't live up to their delivery standard. It was late or it never got there or whatever. Like, you get a refund. You're never too big for those. I think Refund Retriever and other companies like that, like those are great to sign up for at any time. I'll let Philip give his opinion on negotiating, like when you're big enough to negotiate.
Yeah. I'm trying to think back when we did it. There's a couple of different strategies you can go about. If you're smaller, probably just starting out, trying to put multiple carriers together, shop them against each other. Even without a very sophisticated retailer, the carriers are going to lower their rates to you just by doing that. Also, making sure they're using more than one carrier. If they're only using UPS and they ship lightweight products, they're getting killed, or FedEx, because the USPS will destroy them on price on smaller items. So just, having at least some software in place, I think ShipStation will do it, that will be a little sophisticated about rate shopping is going to help. But at a certain point, it does help bringing in a company that can negotiate for you. And typically what they'll do is negotiate the price that people have worked at UPS and FedEx before. They'll come in, they'll save you, whereas you pushing back at them might be able to get $100,000, maybe $50,000. These companies will come in and get you $200,000 in savings and then want to split it with you. And typically it does end up in the retailer's favor. And in our case, it was absolutely worth it. So I'd recommend you do that. I think we were at several $100,000 in shipping though, at that point. And then, you get, again, putting the carriers against each other. If you've been with a carrier for a decade, probably a good idea to shop around and just see what that will do. We've heard and seen significant savings from doing that. So
and from like Catching Clouds, we would talk to clients under $1 million and provide guidance, but we wouldn't take them on. That still seems to be, you're doing 80 to 100K per month. Really is that evolution that, look, you need to be looking farther forward. You've become a real business. Just below $1 million, Acuity, and we can provide support for some of those businesses, but not when they're just too small. They go out of business. That was one of the reasons we had a couple clients go out of business. We're like, yeah, we're going to work with the larger clients. So I'm going to flip into Q&A mode. So
That's the question there, right? Oh, right.
Yeah, one other ask anyway. All they can do is say no. If you're too small, they'll tell you.
I want a quick clarification that number, that $1 million, is that revenue?
yeah.
Okay. The quick answer to the A2X question is, the way the A2X product was built was it could manage anything from and assist with any business from as small as a few hundred orders a month or even less. And I'm thinking in terms of orders, because you can imagine how complexity can somewhat be mirrored to order note size, up to hundreds of thousands, literally hundreds of thousands of orders a month, which gets into the often, tens of millions of dollars of revenue. And so, and you can imagine that, our price point starts at $19 a month up to, pretty large figures. So I imagine you guys would suggest that getting your data flowing, accurately and efficiently and automatically, there's no too early time to start. However, many small businesses, and if I was an e-commerce merchant that was starting, I'd probably be just using spreadsheets and, up until a point when I probably need to do it properly, that I know I'm, a real business. Sorry, Scott.
No, that's fine. Anybody else have any questions? Yeah, Anthony.
With some of our clients, we're kind of seeing, kind of talking about the two ways of approaching the downturn right now, either kind of slowing down or doubling down. With some of our clients who are doubling down and are looking to get more diversified or add new lines, add new products, add new kinds of stuff, what advice can we provide them to help them grow intelligently? Because I know we've had some issues with what kind of thing I'm thinking of that are growing really fast, but we're kind of like having to like catch up to get them to grow the right way or to grow effectively.
Yeah. One thing I'll have to say is that, a lot of entrepreneurs like me go really fast. Entrepreneurial ADD really is a key thing, and I've got it bad. And that they need an accountant who will take an analytical look and take a step back. So you can add value just saying, well, what is the biggest decision or challenge in your business right now? And then just help organize it. Do a little search on Google, build them a spreadsheet, because they probably didn't do it. They're like comparing the shipping on their own, on their head, and they just haven't organized it into something that they can practically use. And then it's, have they, okay, this month, what are you focusing on? Oh, cash flow. What are you focusing on next month? Supply chain, shortening it up and doing whatever. The idea is to just like, it's just this round robin, because e-commerce entrepreneurs have to figure out what they're going to buy, where they're going to buy it, where they're going to sell it, how are they going to market it, how are they going to run their company, are they going to outsource to a 3PL? There's a lot of things along those lines. But at the same time, the nice thing is, especially during the assessment, we have access to their financials. And if you've got their financials, you'll go, here's a pain point that they may or may not know about. And that's the other thing is, bringing up those kind of things. Do you guys have anything to add? Yeah.
I will say if you can show them the deltas and things other than the top line, right? So, hey, you doubled revenue, but like net income only went up by like 2%, right? Like, let's dive into the other areas and figure out why. I think you'd be surprised how a lot of entrepreneurs don't pay attention to those types of things, or they don't realize those things until later. So just show them the deltas in areas outside of just net income. And I think that that'll be like a light bulb for some of those guys. Yeah.
No, I really like those comments. Like, the scary thing is when an entrepreneur keeps throwing more growth on top of a system that's really kind of broken and not really optimized. So that was my thought too. Like, just make sure that they are taking the time to focus on the basics, right? Their supply chain, their costs, is that stuff really optimized? Is there some room to improve that before, they layer on more sales that really aren't bringing them profit and EBIT? So, yeah.
I can throw one little comment there too. And I think something Jermaine said about moving from maybe looking at your financials the 10th or 15th day after the month ends to maybe getting it down to under a week, or maybe soon one day, almost real time financials. If you could have a sense of how you're doing on a more granular and faster basis, there might be opportunity to experiment with things, at a smaller level rather than going big and having to wait for 45 days to see if it worked. If you can kind of track things more automatically, which a lot of the tech that firms like you guys use could help with, might give it more opportunity. One thing I thought I'd throw out there just because it's on my mind is that e-commerce is still growing really fast. It's just I don't know. I feel like the Shopify article talked about the curve going from this to this, but now we're just back down to this. So in the grand scheme of things, it's an area that's growing very, very fast. I have 2 teenagers at home. I guarantee you they're going to be shopping more online than in physical stores, as I think we all are. So it's like a real giant growth opportunity. It's just, I think we're all just still digesting the fact that we're back. We've come back down to earth to just having a really nice growth rate as opposed to an astronomical one. Yeah.
Wow, that's an excellent point. Thank you. Anybody else?
Just let them know hope is not a strategy. You need to plan.
Okay, that's the quote from the thing. Yes.
And hopefully this isn't too much like the last question. I'm just wondering, like, if you had accountants when you were going through your stuff, and what you wish they had told you that they didn't. I think we'll stop there.
We did, and we actually used Acuity, and it was amazing. We might have been one of your earlier e-commerce clients, right? So Trisha was our bookkeeper, and then Jessica as well. So yeah. So what do I wish they would have told me earlier? I'm probably not the best person to ask that because I have a background in like finance. So I was pretty in the weeds of things, to be honest with you. So let me actually defer to Philip and let me think about it a little bit.
Yeah, so I wish we knew about Acuity back in the day. We absolutely had a bookkeeper, but having a firm like you guys where you have a team that just works with e-commerce companies and you kind of share that knowledge between each other and then to the retailers, I think is fantastic. And I wish we had that. We kind of cleaned that up because we had to before our sale a few years ago and got much more sophisticated on the financial side. And we're already seeing the benefit of that. I mean, when you really start digging into your costs and understanding them, and you have somebody who knows what they're doing, looking at that full time, you're obviously going to get benefits. And I love the talk here of you guys taking this more than just, hey, I'm going to manage your books, but hey, by the way, here's some strategy that I can help you with. I just think that's really powerful. I wish we had that. We're definitely in a lot better place than we were before. So again, it goes back to the data, really, and this is a huge piece of the puzzle. So
I think I know. We spent a lot of time building solutions in-house to solve problems and pain points that we had. I think most of those were justified because some of our business processes were very unique and complex. But I think that some of the things that we built, it would have been helpful if someone would have come to us and said, hey, there's a tool out here that does 90% or 85% of what you want done. And this is the cost. And if you're going to build it, this is the cost on that side. I think that would have been helpful for us to kind of say hey, build versus buy. And here's what other people are doing, right? I was always let's build it, right? And hindsight, that probably wasn't the best for everything that we did. So.
That's great. Well, we're going to wrap up here soon, but any final questions? All right. Yeah, no, that's great. I'll just wrap up. I mean, sales tax still continues to be a challenge and burden and concern and something we can help out with. But yeah, we really can just help out our clients asking questions. And you don't have to be super technical or 10 years of experience like me. You just have to be curious and ask the questions of the clients and then dig in and solve the problem. And then you have a ton of resources, okay? You've got myself. There are 29 people actively involved in our e-commerce practice, not counting some of the other Acuity people doing the smaller clients that I haven't fully got my arms around. So tons of internal expertise. And then we have great resources, friends, peers, people that we know, vendors and others to pull that information together. So, you just need to know 1%, 2% more than somebody to seem like, an expert. And that's the secret of me doing stuff. That and I just make stuff up. I want to thank the three of you. This was excellent. I actually got a bunch of stuff out that I didn't think of. And I really do appreciate it.
Thank you. Yeah, thank you guys.